What's up, everybody? Scott here. So in this video, let's talk about tax deductions for your therapy, your hypnotherapy, your coaching, your NLP, or even your RTT business, and wrapping your mind around what you can actually claim as a business owner through your tax and understanding how you can leverage the money you earn as a therapist or a coach, pay less tax, but also know what you can start to claim as a business owner. Now, I don't think there's a business owner alive who enjoys getting one of those tax bills, but hey, let's look at it as a sign of growth. There is nothing more important than growth in a business, and knowing that your taxes are starting to rise and even including your GST is a great sign that your business is doing the right thing. So if you're getting big tax bills, congratulations. It is a clear sign that you're doing something right in your business. And hey, as we start to grow, the more tax we're going to have to pay. The more money you earn, the more GST and tax and income tax you're going to start to get bills for. And these are things that you want to take into account when growing your business. So in this video, let me break down some really simple ideas around your tax and your deductions, but also make you very, very aware of the types of things you can actually claim as maybe even a novice business owner or someone with a bit more experience in the industry, but also knowing how to handle your tax bills and your GST bills as your business starts to grow. Now, I'm not going to get too far into detail about the amount of GST, the type of tax or the income tax that you'll need to pay because, hey, I don't know how much you're earning. And we have to realize that every country, every state has different rules and regulations. So above all, what I want you to take away from these videos, some really simple ideas, but I also recommend that you hire a professional tax agent or even a tax lawyer to take you through all the intricate details because, hey, knowing exactly how your money is spent, knowing what you have to pay to the government, knowing what your tax and your income tax, yes, all the boring stuff is one surefire way to leverage the most success out of your business as well. Of course, I have to have my little interview, but hey guys, I've got something very, very special for you. Make sure you stay to the end of the video because I'm going to actually give you guys something very, very cool. In this video, I'm actually going to show you how you can get my 100K coaching program, which is helping therapists and coaches start their business from absolute scratch, guys, to growing to six figures and even multiple six figures in under 12 months. I'm going to show you how to get this entire course, which we have lifetime access to our Facebook group, and lifetime access to personal mentoring from me for absolute free. But hey, you've got to stay to the end of the video. I'm not going to spoil the surprise now. So guys, let's dive into understanding your tax as a coach or a therapist and really understanding what deductions you should start to look at to leverage the most out of your business. Let's go. One of the first deductions you guys should be looking at, and as I mentioned just before, you want to hire an accountant or a tax lawyer to be looking at your taxes every 3 months or even at the end of the year. And yes, your accountant's fees or even your tax lawyer's fees are 100% tax deductible in your GST and also your tax bill. So for example, I run a company and I have an accountant. I also have a bookkeeper, plus I have a tax lawyer. All of those fees that are being charged by these professionals to take care of my numbers, to take care of my books, to do my GST, to do my income tax and deal with all the numbers that I don't want to deal with, I can actually claim their fees back, which I pay monthly in my tax bill. So at the end of the tax bill, the end of the financial year, all of those fees that I paid towards these professionals, I can actually claim by 100%. So the next deduction, a lot of people don't realize, if you're renting a house or a unit or a property and you're working from home, which most therapists and coaches are, you can claim upwards of 50% of your rent back on your tax. Now, I'm only going to talk about what happens here in Australia. It's going to be maybe completely different like Canada, for maybe America, for Europe and all around the world. But here in Australia, we can actually claim back up to and a little bit over 50% of our rent back on our business because we are working from home. Now, if you're not renting and you own your home and you are paying a mortgage, I don't know if you realize, but you can actually claim your office. So I don't have a mortgage, but I run my business from my own home, which I own. This office you guys can see me in, I can actually claim this space right here that is inside of my house. I can claim this back as a tax deduction. So all I had to do for this was actually send the measurements of my office to my tax professional. She sorted out how big the office was, and this now becomes a tax deduction for my end of financial year bill as well. So whether you're renting, you can claim back 50% of that rent, or if you have a mortgage or you own your own home, as part of your tax deduction, you guys can actually claim the office space that you live in. And like I recommend, if you have an accountant, just let them know how big your office is and they can take care of the rest for you. Now, the next deduction to look at, if you are running things like events where you may be hiring like a seminar hall like I used to, you may be paying for catering, these are tax deductions as well. Now, you're probably already aware of this, but in order to hire a hall, it might be some sort of travel time in your car. You might be paying for catering. You might be paying for posters and flyers and business cards and anything like that. These are all simple tax deductions. So as an example, when I used to teach conversational hypnosis, I spent a lot of time flying around Australia, flying to different states rent and also hiring out different halls. I got my plane ticket, I got my food. All of these became a tax deduction. So again, always letting your accountant know about if you're traveling from maybe state to state. Are you driving your car? Are you having to pay for catering? What is the cost of the hall that you hire? Any sort of things that you're buying to boost the event, any sort of even like Facebook ads or marketing, these are all simple tax deductions as well. Now, most people would know this anyway, but I want to make you aware and really drill it down to if you are using flyers, you are using business cards, you may be going to places like Officeworks here in Australia and you're printing these things out, these become a tax deduction as well. So make sure you keep a track record, keep all the receipts for this, let your accountant know, and yes, these are all 100% tax deductible as well. So the next is not really a deduction, but it's understanding the structure of your business or even your company. So most therapists and coaches that'll start out, they'll buy their business name and they'll start with what's called a sole trader. So here in Australia, our sole trader is someone that earns from zero all the way up to $75,000 a year. We can claim our business. That's what it's called, a business up to $75,000. Beyond $75,000, we've got to start dealing with things like GST, which I'll talk about in a moment. So from zero, when I was a sole trader, from zero to $75,000, I was known as a sole trader. And there's different tax implications as a sole trader. Now, once I went way beyond 75,000, I then had to talk to my tax lawyer and I turned my sole trading business into a PTY limited company. Now, this was on her advice. And the reason we did this is because now I have to start paying the pesky GST, which straight off GST is 10%. No ifs, ands, or buts. 10% of all the money you earn straight on a tax bill. Then you have your income tax on top of that. Then you have your general tax on top of that. So GST, although being a bit of a pain in the ass, going from a sole trader to a company allows better tax implications. So even though I'm earning a lot more, a hell of a lot more than 75,000, my tax is actually rather minimized as a company. There's different things that happen at a sole trader level that they do at a company level. So if you're beyond 75,000, you probably already realize that you should be, or if you're not, you definitely want to make sure you're paying your GST, and you can set that up with your accountant as well. But it's definitely worthwhile talking to maybe like a tax lawyer and seeing, is it better for me to go from a sole trader to like a PTY limited? Over in like America, you might have like an S Corp company or something like this, but there's different implications for where you live and where you're basically structuring or running your business from. So like I said, here in Australia, from sole trader to a PTY limited company, different tax implications. And again, this is already starting to get confusing. That's why you want to hire a professional, which you can claim back their fees to set all this up for you. Now, to set my sole trading business to a company was a couple of $1,000s. You get a cool little certificate, which I used to actually have behind me. I don't know where it is now, but what it also means that when it comes to tax time, there's less tax I've got to pay. It's more structured around my income tax. There's better benefits, other things I can claim that I couldn't claim as a sole trader. So it's definitely worth your investigation once you get past that $75,000 mark. The next deduction to think about is a little bit of a morbid subject, is what happens once your business is done? What happens when you're done being a coach or a hypnotherapist? Here in Australia, and also having my company, it is up to me to pay something called superannuation. So over in America, you've got things like your 401k, but basically this is like a savings account that I can access once I retire. Now, the threshold's a little bit different depending on where you live and from a sole trader to also a company owner, but here's how it is here in Australia. So at the end of every year, obviously I get my big tax bill, which I pay quarterly. But what happens is before tax, I can actually pay, and I have to pay because I own my company, I have to pay into my superannuation. And I have a threshold of $25,000 that I can pay into my super. So let's do $25,000 a year that I have to put into my super, which is that government savings account. So I've got money for when I retire. If I do that over 20 years, I now have $500,000 in that account that I can live off. The cool thing about this, that $25,000, I pay that into the superannuation. It gets deducted from my overall tax bill. So let's say, for example, your end of year tax bill was $100,000. If I put $25,000 into my superannuation, $25,000 comes off the end of that tax bill. So now I only have to pay $75,000, which is really cool. That happens before tax. Now, after tax, and unfortunately, this does have a few fees with it, and you do actually get taxed on top of the tax, which is a bit weird. You have an advantage or a maximum where you can put an extra $100,000 into your super. Now, this gets a little bit complicated, and it's after tax, so it's not before tax, so it actually will get taxed. I'm saying tax a lot, but you do want to speak to a professional about this. But ultimately, what this means is leveraging more of your money, putting it into the right places, into your superannuation or your retirement savings, your 401k, whatever you call it, wherever you're basing your business from, and really understanding that One day you will retire. One day you'll be sick of your company or your business. You might want to sell it. You might want to move on and do other things. Starting to set yourself up for retirement now is definitely a surefire way to succeed later. But hey, I get it. We're entrepreneurs, we're therapists, we're coaches, we're earning a ton of money now. We want to go have fun. But I highly recommend you start thinking about the last chapter of your life. So start putting some savings away, starting to build up your superannuation, even if it just is that threshold before tax of $25,000. Do that over 20 years. And now you have $500,000 in that account that'll be given to you anywhere between, I believe the ages are 65 to 70 years old, which you have access to. And now you can retire with $500,000 in the bank. It's a great place to be. The next big thing and the deduction you want to look at is extracurricular education. So these could be things like books. These could be things like courses. And yes, some even therapy, hypnotherapy or NLP courses where you're exacerbating your skills can actually be claimed. Now, not all of them will allow you to be claimed by 100%. Again, talk to your tax agent about this. But any extracurricular courses that help you improve the success of your business, the income of your business, or even learning about just the accounting of your business. You might go do a course for that. These are all 100% tax deductible as well. So including in this, as I mentioned before, things like Facebook ads, Google ads, YouTube ads, flyers, and business cards, these are all part of the marketing strategy, which helps you grow your business. So these rather are all tax deductible as well. And again, talk to your tax lawyer about this or your tax agent. Again, my real point here is make sure you're keeping the receipts for everything you're claiming, and realize that anytime I'm trying to improve my business, make sure you speak to your tax agent about that and see if you can claim this thing back on tax as well. As we come close to this rather short video, giving you an idea around your tax and your deductions, I did promise you guys a surprise. And that surprise was you guys can get access, free access, lifetime access, and enroll into my 100K coaching program for free. So how are you going to go ahead and do that? Well, just as I mentioned before, any extracurricular courses that help you grow your business are 100% tax deductible. So that means that you can actually enroll in my course, and come tax time, you can pass it off to your accountant or your agent, and you'll get all that money back. And actually in week 6 of our 100K coaching program, I actually tell you what to say to your accountant to make sure you get this $997, which what our course would actually cost to enroll. You will actually get that 100% tax deductible, because it's showing you how to market your business, grow your business. And from that, you're going to start earning more money. You're going to start to increase your income. So this is now a claimable tax deduction because it's helping you grow your business. So there's a link below. Make sure you click on that. Like I said, you can enroll. Obviously, you've got to enroll with it now. And then come tax time, you can actually claim this course back 100% deductible. But really, when it comes to it as a business owner, a therapist, and a coach, this was just a really brief overlook of your taxes and your deductions. As I keep saying, I sound like a broken record now. Make sure you speak to a professional about this, but it's really to understand this one core value about business. I was always told when I first started business, it's not about how much I make, it's about how much I can keep. And understanding my tax, the rules around my tax, my GST, my income tax, allowed me to make or leverage more of the money I earn instead of having massive tax bills. But what I see is a lot of new therapists, a lot of new coaches, entrepreneurs in general go ahead and do this. And I'm going to put myself in that category as well, because I made this grave mistake. When I first started to make money, I started to purchase things that had no claimable tax. And these were things like fancy watches, going on cruises, holidays, expensive dinner, jewelry, all of the cars and all of the stupid rent of houses and all this stuff that I was buying, that when it came to tax time, I wasn't able to claim these back in my business. So what I see a lot of coaches and therapists, entrepreneurs will happen, they'll go and blow all their money on all this fun, shiny objects, which sure is a little bit fun at the start. But when it comes to their bi-quarterly tax bills or something like this, they've got no money left in their bank. So guys, please avoid this disaster that can happen in most businesses, which is you start earning money, you start blowing all your money on things that you cannot claim back as a business expense. When it comes to paying your tax bills, even your GST bills, you've got no money in the bank. That's all from me for today, guys. Make sure you go and enroll into my program. There's a link below. Like I said, in week 6, I show you exactly how to claim this course back on your tax. I've done all the thinking for you. So guys, hopefully that was enjoyable. Gave you a brief overview of what you can actually claim in your deductions as here in your tax. So guys, I'll see you on the next video. Bye for now.